Hi, it's Stephen Vincent. This is a BullBear Traders video update for May 19th, Thursday, May 19th, 2011. This is the S&P 500 E-mini contract, and this is probably my preferred scenario at the moment. We are short from right up in here about 1340, and I am thinking that we're probably going to see a pullback, a pretty sharp sell-off in the next couple of days, is starting and completing a C wave down to complete a correction that's really been underway since February, where we started with a top in February. We got A down, three waves down, three waves up for B, and now we're in a five-wave move down for C for a flat correction, A, B, C. That should raise fear levels and get us set up for a fifth wave move up. A few features on this chart. I want to note that this red trend line here, which supported the rise off the August bottom, and that was broken. And now we've come back up. We didn't even really test it from below, which happens a lot of times when a market is topping. But as I call this, flipping the line. So we broke it, now we've come back up. And that is typical of the topping process, and it indicates to me that we're in some sort of topping process. The amount of time that we've spent in contact with the 20 and the 50-day moving average is a lot longer than any other pullback that we've seen in the entire bull market. So this is really showing that the market is starting to get tired and really testing this support of the 50-day moving average. And when that test fails, and I think it's only a matter of time, not if but when, because it's been tested so many times, it should be a pretty sharp sell-off. And here is the alternate view, and this view would have us make one more final move up here to complete a fifth of fifth. And my sense is this would be the first wave of a much larger five-wave structure, so it would be one of three. So we had major one up, major two down, and then one of the third wave, second of the third wave to test this zone of support. And the zone of support would be pretty much the same on both of those corrections. Be coming in at about a 38.2 Fibonacci retracement of this move off of the July bottom. And another difference between the two charts is this would be correcting basically the move off of the July 2010 bottom. And this would be correcting the move off of the August-September 2010 bottom. We've got this zone of support of the April 2010 high, the November 2010 high, the February or March rather low, and the 200-day moving average, and the uptrend off of the bottom, all kind of coming in here in this same zone, which I think will be the important support where we could come in and buy again. Now here is the short-term chart, shows us where we are today, and it could really go either way. If we get back above 1348 to 1350, then we're probably getting that fifth wave up. If it doesn't, if this resistance keeps knocking on it and then we roll over and break back down between 1333 or so, then I think we're going to get our C wave down. The 50-day exponential moving average is coming in about 1328, right about here. So that would also correspond with this low, this important low back on the 6th or the 5th. And so that would be an important level too. That broke, we'd be looking for our C wave down. We've got a lot more for you, a lot more technical charts that I want to go over. So I guess I'm going to do a second video for you today.